Carl, the Federal Reserve finally raised interest rates at the end of 2015. How was that received by markets?
Long anticipated, the interest rate increase that the Fed finally implemented in December was well foreshadowed and well received. We had been very concerned about any sudden movements upsetting markets, but the Fed really began 2 months prior to making the actual move and beginning to drop hints that they were heading in that direction. And then on the day that it was announced, the Fed, and in particular Fed Chairman Janet Yellen, did a very nice job of explaining the context that supported the increase at her press conference.
What are some of the key factors that the Fed will be watching as 2016 unfolds?
It seems unlikely that the Fed will do one and done. They'll certainly be on the lookout for an opportunity to continue normalizing interest rates from where they are today. Among the things that they're going to be watching most closely is the American inflation picture. The Fed has a 2% target for our inflation, and we've been running well below that for a period of more than 3 years. But if economic activity continues to progress, it's likely that it will move in that direction, and so that progress will be key to the size and also the timing of any subsequent Fed moves. They'll also be watching for any signs of financial market excess that might arise from keeping rates too low for too long. And as always, they'll be vigilant about conditions internationally. The Fed's movements here can have an impact on global markets, and they'll want to be sure that any subsequent action doesn't create uncertainty.
Does the Fed need to consider the health of emerging markets as it sets American monetary policy?
This has been a very hot subject for debate. There have been voices overseas that note that borrowing in US dollars is done globally, and the Fed, of course, sets the tone for international markets with what it does. Unfortunately, the Fed's mandate is based on U.S. economic performance, primarily in employment and inflation. And I think it has argued persuasively that if it takes steps that are good for the American economy, it will be good for the global economy because of the important role played by American consumption. So while they should certainly keep an eye on global markets, it probably behooves them to keep a primary focus on what's happening here in the United States.
So considering all this, what do you expect the Fed to do in 2016?
Based on what we know today and our forecast for 2016, we're expecting the Fed to raise interest rates only 2 more times in 2016, likely in the middle of the year and then again at the end of the year. And that pattern is based on what we see progressing with the economy, where we see the expansion continuing but perhaps at a modest rate, and inflation, which will probably progress very, very slowly to the 2% level. And the Fed will want to be very careful about moving too aggressively before they're certain that their goals will be met.